Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, November the 14th, the year 2019. Let's talk trading. First Principles Trading, Part 7. This one shouldn't come as a shock. It shouldn't surprise you. But a first principle of trading is the market doesn't care about you, doesn't give a hoot about you. The market, for the most part, doesn't even know you exist. Why am I talking about this? Well, I can tell from the comments that some people still believe in some of the trading myths. Oh, they're running the stops. The brokers doing this, the brokers doing that. I mean, come on. If you're trading a mini lot account, do you really think, or a micro lot account, do you really think the broker cares about you? That somehow they see your stop and the entire market is gonna move 2 pips or 5 pips or even 20 pips just to get your stop. Um, you know, let's get serious here, folks. Let's get real serious. The market doesn't care about you. And not only that, there's a lot of people out there who basically want to separate you from what's in your hip national bank, that being your wallet, your pocketbook, and they'll proclaim to even love you, and they'll send you videos every day. But the thing is, they only love you if you buy something from them. You have to purchase. They'll only love you if you go along with what they say. But at the least, what's the word? Uh, Time you go against them. Oh, you will get shunned. You will get banished. You'll get booted. Oh no. So long as you preach their gospel, it's all fine. It's all brotherly, sisterly love. But if you so dare as to mention another trader, another method, even your own method, your own idea, oh no, you are gone. You are history. So that's just how much they love and care about you. But you probably already know these things. But sometimes, based on empirical evidence, what I see, what I hear coming from other traders, you don't remember it. I mean, they're going to try and sell you something every day, whether it's 497 pounds or 37 US dollars. They are going to try and hook you on something. Now, somebody out there may retort, well, Rumpled One, you've got those donational indicators. And it's like, yes, so I put plenty of free stuff out there. And, they go, oh, yeah, but the good stuff, no. TROHL5 is the good stuff. I use that. That's like one of my first go-to indicators. The TRO multimeter candle color, that's a go-to. A few of the indicators that I've modified and put those mods out there for free, those are go-tos. I mean, you can see when I show you the indicators on the charts how few of them are donational. Because like I've told you before, you don't really need indicators. People were trading long before indicators came into existence. All indicators do are help you see. They're a gauge to let you get a reading rather than you have to do math in your head. They help you. You can use them to run some statistics. So you can use them to select trades. But I mean, there's this one that's out there saying buy, sell, wait. Yeah, I've written a few of those too, based on different systems. But you use everything at your own risk and your own peril. You have to use your own common sense because, boys and girls, fellow traders, you all know these videos are for educational purposes only, and your results may differ, vastly differ from mine. And that you all know that trading, especially Forex trading, is very risky. You could lose all the money in your account. So, if you need advice, if you're seeking advice and guidance in the financial markets, make sure you get your advice from an accredited financial professional That way, when you lose your money, you know you got your advice from an accredited financial professional rather than just somebody you heard on a YouTube video or somewhere, some trading forum on the internet or something. Okay, now, and you all know, because I beat it into your heads every day, that you have to have your risk management in place. You cannot afford to lose more on any one particular trade than what you're willing to lose on any one particular trade. You don't want one trade to wipe you out or put you at such a sustained loss that it's going to take forever to recover. No, no, no. Okay, clean chart. Okay, here we go. Once again, simple TRO, HL5, and the buttons indicator that I modified. It's just simple. All we're doing here is showing the previous day's high and low, and you can see the breakout here. There was some waffling, and finally it broke, right? I mean, that's just as plain as day. Simple. For the week, we still have 3 laggards that just don't want to fill. And let's see, it's Thursday. Chances are they might not fill, but you never know. There could be some news that reverses the markets, and we see what happens. As far as dollar yen on the weekly, you can see here we exited that upper wick zone, and we're now what, 82 pips, 83 pips below. Just a straight trade. And once again, if you're trading a wick zone, oh yeah, I forgot. People want to see what the indicators are. If you're trading a wick zone, does it work? You have to make it work. It's just a trade. It's just a horizontal line trade. If you put your stops too tight, you get stopped out. You put them too loose, then maybe you lose too much. And it takes you a longer time to get it back. You have to figure those things out. On the daily, you can see here we opened below the previous day's midpoint and down. Now we're 127 pips below that yearly open. We got 1, 2, 3, 4, 5 down days in a row. And the indicators. You can just pause the video when you're watching it if you want to pick up those videos. Okay, what happened? We broke out of the first trading day of the year's range right here. Big time breakout. Broke out a little bit yesterday. Broke out of the opening range here for the week. That first day of the week range right here. We broke out. And you see here we broke out of the year. Then we came into the range of the month, and then we just pushed back up. Isn't that interesting how that works? But you can see here, simple horizontal line trades, trading in the direction of the cross. Openings here, we bounced off of the June 3rd, 2019 open right there. Actually, we penetrated it and then crossed back over. And here in the ranges, we got inside this month's first day's range, and we popped right back out. We saw that earlier. Inside bar trades. Now, this is really interesting. You see that? We hit the low of the inside bar on the weekly 14 bars ago. Right there, you see that week. 14, not weeks ago, but 14 daily bars ago. It's actually 3 weeks ago. And you see here we're inside the monthly inside bar there. And we'll have to really scrunch the chart to see that right here. So the inside bar trades, once again, proved profitable, but you just have to trade what you see when you see it, right? Oh, we've got 5 pairs with the range over 100. Once again, we're showing that breakout here of the lower wick zone, previous day's low. We just put in the weekly H1 lowest open this hour, and we're a few pips above right there. Buy zone. Pivot was in the buy zone, so no real bias based on that, but the daily opens below the weekly, so that gives us a short bias. So you can see here if you took any of these shorts. Rat zone, we finally got some separation here, green rats. I hope you're feasting. And the pivot, waiting for a tick here to refresh the chart. Or maybe not. There's a tick. And there's the refresh right there. See, we missed that pivot. But we took out this pivot here. So that's one less missed pivot. And that pivot was on 11.5. Okay, so we've got a missed pivot today. And then we have a missed pivot from 11.4 right here. Price action. We see it every day. 3 ball at the bottom, looking to go green at the line. Price doesn't like staying within the dots, or between the lines rather. And you can see here, just trading off the dots. Sometimes you can get 10 pips, sometimes you don't. Sometimes it goes against you and you get stopped out. That's trading. And once again, the wick zones right here, you know, small amount of pips at first, and then finally got that break you were looking for, and it turned on the pip faucet right there. So if somebody's saying, well, you know, I put my long in here and then it came down here, but once again, right there, you see the top of that candle? Say you went in, then it went against you, came back up, but it didn't quite hit where you wanted to TP. It came back down. Sometimes you have to exit. You just scratch the trade. If it's not really moving your way, because wouldn't it be better to take a 2 or 3 profit right here than it would be to hit your stop loss? So I just don't know what else to tell you guys. And you've seen this chart a bunch of times, but let me move over here because I know there's a trader that's really interested in the indicators used here. Mainly, we've got the ATR lines indicator, and we're using the range gauge here, and those are the main ones right here. I mean, I've got the first day indicator, but you don't really need that on this particular chart. I'm showing it for effect just so you can see what happens during the week. Okay, but here's the ranges here. So you can see what the yen has done. It came through from the weekly open. It came through and it actually hit the ATR, half of the ATR 14 from the open. Went through that position here. Then for today, you can see it actually hit the ATR zone right here. Went in, and now it just looks like it's trying to reverse out. So that's it, fellow traders. Just remember when you're trading, the market doesn't care about you because it's not what you trade, it's how you trade it. So go out there and drain the banks.